Imagine a world where trust is absolute, where financial geniuses are beyond reproach. But what if behind the curtain of success lies a web of deceit, a scheme so grand it fools the world for decades? This is the story of Bernie Madoff, the mastermind of the largest Ponzi scheme in history. Bernard Bernie Madoff began his journey in the financial world in the 60s. He founded the Bernard L. Madoff Investment Securities LLC with a few $1,000s he earned working as a lifeguard. Over the decades, Bernie built a reputation as a highly respected investor and even served as the chairman of the Nasdaq Stock Exchange. But behind the facade of success, Bernie was running a colossal fraud. His investment advisory business, which promised consistently high returns regardless of the market conditions, was nothing more than a Ponzi scheme. A scam where returns to earlier investors are paid using the capital from new investors. In a legitimate investment, returns are guaranteed from profitable activities. In a Ponzi scheme, however, there is no actual profit. Instead, money from new investors are used to pay off older investors, creating an illusion of success and profitable business. Bernie claimed to employ a split-strike conversion strategy, a sophisticated-sounding method involving options trading. This strategy was designed to be complex enough to deter most investors from asking too many questions. They trusted Bernie's reputation and the allure of consistent high returns. Part of his genius was creating an era of exclusivity. Investors believed they were part of an elite group with access to spatial opportunities. This word-to-mouth reputation spread, attracting more and more victims eager to join the ranks of the chosen few. In 2008, a global financial crisis unfolded.
Market deteriorate. We read everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
The pressure on Bernie's scheme intensified. Investors, panicked by the market crash, began requesting withdrawals in masses. Bernie was unable to meet his request because in reality there was no money. On December 10, 2008, Madoff confused to his sons, who worked at the firm, that his entire investment advisory business was one big lie.
Everything I've been doing is all a big lie. He said the business is a Ponzi scheme, and the firm is completely insolvent, and I'm broke. And then he just started sobbing.
They reported him to the authorities and Madoff was arrested the next day. In March 2009, Madoff pleaded guilty to 11 federal felonies, including securities fraud, investment advisor fraud, and wire fraud. He admitted to operating the largest Ponzi scheme in history, with losses estimated between $18 billion and $65 billion. Madoff was sentenced to 150 years in prison, the maximum possible sentence. The court also ordered him to forfeit $170.8 billion, an amount greater than what was recovered. So, how did Madoff keep the scheme going for so long? It involved meticulous manipulation of account statements, fake trading documents, and even creating entire floors of employees whose sole job was maintaining the illusion of the legitimate operations. The scandal also exposed significant flaws in the regulatory oversight. The Securities and Exchange Commission, SEC, had received multiple warnings and red flags over the years but failed to take a decisive action. This negligence allowed Madoff to continue his fraud far longer than he should have. Irving Picard was appointed as a trustee to recover assets for the victims. Through lawsuits and settlements, Picard managed to recover billions of dollars, which were distributed to the victims, although many never fully recouped their losses. The Bernie Madoff Ponzi scheme is a stark reminder of the potential fraud in the financial world and the devastating impact it can have on investors. It serves as a cautionary tale for everyone involved in finances, investors, regulators, and professionals alike.